Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. I'm your host, Dylan Silver, and today on the show we have Steve Franco. Steve is a real estate entrepreneur, and Steve, welcome to the show.
Thank you, man. Thank you for having me.
At the top of the show, I always like to ask folks how they got into the real estate space. What was your entry point like? Was it in your blood?
I mean, I grew up in it. My family had some properties, but I really went into real estate. I went into television production, and then kind of got married, and life changed, and whatever. I was doing international stuff in the technology field, and kind of got out to this little market which didn't have any real media. So it was like, okay, got it. I mean, I bought a building back in 1997 with my brother. Still wasn't paying attention to real estate, and then in '09 started buying full time, and kind of making real estate a thing. Started
Okay.
wholesaling, landlording, wholesaling, flipping, whatever.
Okay,
Kind
so
of doing it all.
family background, parents were brokers, realtors, or lenders. What was their
I mean, they
involvement in
were
the
both
space?
brokers, but more or less they just owned some property. They just owned some rentals. I mean,
Okay.
back then you got a broker's license because you walked in and paid $25 and you became a broker. There was no,
It wasn't
that,
as much.
that,
I
that,
just got my license in Texas 2 weeks ago, and the test was so hard. I said, "Wow, I have a lot more respect for licensed agents in Texas now."
yeah, yeah. It's definitely, if you've never been through something so procedural, because I mean that's my biggest thing in television, in real estate. Because television, there were no rules and regulations. It was get it on the air. And in real estate, it's all paperwork and laws and process. That's like, most of what being a real estate agent is.
I like to say, at least in Texas, you have to know all these rules and regulations and laws, but don't ever use it. Basically, you have to know it all, but don't talk about it, because then you're committing the practice of law without a license. So,
Yeah, yeah,
know everything, but don't ever use it. So it was an
very much.
interesting deal there. So 1997, you get a property, but then you leave that on the back burner until the crash happens. You really got in at the right time for the second go there. And so you mentioned wholesaling. That's how I got in. Um, what was the beginning stages of that for you? Like, was it a very educational period for you? Were you diving in head first? Did
Mm.
you have mentors at that time? How did you start wholesaling?
I basically, because I was buying heavy at that point, and we didn't really plan to buy at the crash. We sort of refinanced the warehouse in Boston. My brother and I each took, I don't know, 100,000 or whatever out. And at the time, Scranton Wilkes-Barre was like, I could buy, fix, and be done with a double for under 40 grand and have it fully rented and ready to go. So like, I was buying, and making every mistake you can imagine because I'd read one
Mm,
book on real estate investing. My parents never talked about what they did. The rules 30 years ago were different. And started picking stuff up at tax sale and other ways and realizing that I just didn't want it in some ways. I picked something up at tax sale for $3,000, and walking out the door, somebody said, well, I'll give you 20,000 for it over the next 5 years. I'm like, I didn't even know that was called wholesaling. I'm like, all right, yeah, fine. That sounds like a deal. We can do that. Um, you know, Found out later some of it was wholesaling, some of it was seller finance. Didn't really know they had terms to it. And I did. I mean, I now teach real estate investing, and I teach, creative financing and deal analysis and whatever. But I didn't really take any of those courses, and the one I did take from a major guru, frankly, wasn't as helpful as it should have been. That's why when I teach, especially something like wholesaling, I have a earn while you learn category, meaning you take my class, and then out of our profits together as partners, I pay you back the course fee. The course fee is not what matters to me. The partnership money is what matters to me. So no, I mean, I kind of, learn by doing, learn by getting into it. Gee, let's see what a flip is like. Let's see what a mobile home is like. Wow, that didn't work. It didn't. I'm not a huge fan of flipping mobile homes, at least not down here. But
It's tough.
but it's kind of been very experiential, which is why when I'm, teaching or consulting with people, it's all very much been there, done that. I've been a private lender. I borrow private money. I've done it all.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
So this was Boston area?
No, only the first building was Boston. Everything else was Scranton, Wilkes-Barre, Pennsylvania.
Okay. And at that point, where were you based out of? Where were you living out of?
By the time we started buying out here, we started buying locally, and I was living out in northeastern Pennsylvania.
Okay. Okay.
Um,
So it sounds like you had a multitude of strategies and really figuring it out as you go, which is a great way to learn. There's also a lot of risk there. So you weren't someone who was risk adverse. You were saying, look, I'm going to figure this out. I'm going to learn. I'm going to make my mistakes. I'm going to fail forward, but I'm going to succeed in the end. And so you were doing these deals, realizing after the fact that, hey, that was what we call seller finance, wholesale, so on and so forth. And so was there a niche that you saw at some point when you're doing this? You're like, okay, I'm going to drill into this, or was it, I'm just going to take the deals wherever they come?
Well, I mean, for the most part, I always looked at it like I remember when I got my license and I signed on with the first broker I met with because a friend of mine was going there, and I said, "Don't expect me to sell property. Don't even bother me. Don't call me. I'm not doing your little caravans. None of that. I'm here to get MLS access so I can buy property." And then it was like, oh, commission check, commission check, commission check, and then that became, especially after COVID, I saw people buying property at way more than, and they're still buying it for way more than I would. Because I'm extremely hard on the numbers.
Yeah.
And so, like, if it doesn't make a very tiny donut, I would rather keep my money where it is. So during COVID, I was selling stuff to people and looking at I'll take your commission check, but bluntly, I'm waiting for you to get foreclosed on because the numbers don't make sense to me. And a lot of guys who look at numbers differently own a lot more property than I do. And it works for them, but for me, I have a whole different mentality on the numbers. So I really said, okay, I want to be a landlord. I want to own 20, 30 units. Which we did, and then we sold down during COVID because people offered us crazy money. But really for me, it's a long-term play. That's why I'm getting into self-storage, and they're like, oh, so in 5 years you're going to sell out? No, I'm never selling out. In 5 years, I'm refinancing, and I'm just keeping this.
That's a very interesting strategy to have. I would say I've heard this a couple times now. I'm curious what you think of some related spaces, like for instance, RV parks. I've heard a lot of people talk about acquiring, not necessarily distressed, but folks who have a storage space and they're retiring, right? And so you get to spruce it up, similar deal with RV parks, and using that as a cash flowing asset that's relatively low maintenance. Do you feel like both the storage and RV park space that there may be some similarities there?
Oh yeah, I mean, I'm looking at, residential rental always if it's affordable. And I have to be honest, what's going on nationally and with the economy and stuff, I'm very concerned. because if what's being tried in Washington doesn't work, if we don't end up with the same import-export partners, and if we don't end up with the same job base, who's going to be paying my rent is a huge concern for me.
Yeah.
But go put it back a few years or whatever, even a few months or whatever, and hopefully it all works out. But I'm looking at affordable home, affordable rental. Somebody always has to live somewhere. RV parks, vacation RV parks, all depends on the economy.
Sure.
And we're coming out of a phenomenal buyer's market, people traveling, Airbnb was doing great, that can't continue forever. So I'm looking more at mobile home parks. I'm looking at long-term stay locations. I'm looking at traveling nurse locations, self-storage, things that people have, like what the founder of Google, he calls it the toothbrush test. If people have to use it twice a day, that's what he's buying. Well, they can skip washing their car. Car washes are doing phenomenally right, and they're a great market right now. But if the economy changes, are they? They can't skip washing their clothes. So I would pick, if I had to pick car wash versus laundromat, I'm picking laundromat. If I had to pick RV park or short-term vacation rental, like I'm looking at Airbnb arbitrages right now, and it has to be a market that has not just vacation going for it, like something like State College, Pennsylvania, where there's a research park, there's the university, there's vacation, and there's business.
Let's talk
So
about Airbnb arbitrage. When I hear that term, I'm actually looking at it myself, so selfishly, right? So looking at these deals, when I think about Airbnb arbitrage, I'm looking at this property is available for rent. I'm going to make an offer I'll pay your rent, but I'm also going to Airbnb it out with your knowledge. And in some cases, I'll split profits with you or pay more than what you're asking for, so on and so forth. Is that what you're referring to by Airbnb arbitrage?
exactly, yeah. Yeah, because I'm not ready. I mean, I'm not saying I wouldn't, but I'm not ready to buy, spend $250,000 and hope it works, because the reality with Airbnb is, first of all, that market, Airbnb, Verbo, whatever your flavor is, who knows when that's going to roll up its sleeves. And especially if he's in a state like Pennsylvania, there's no black letter law making it okay. The town can shut you down at any time. So I had a friend who owned a $500,000 beautiful property on the lake that he'd done a lot of work to and was Airbnb-ing it.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And the town shut his Airbnb down. They didn't shut the rest of them down. They picked on his. So all of a sudden, he went from having an income stream to having a property he had to sell quickly. He had to get out fast.
Yeah.
I mean, he had the money to float it. It wasn't like a desperate sale. But so I like Airbnb arbitrage also because all the zoning questions are the owner says to you, yes, this is allowable. And in my Airbnb arbitrage, it's which I have not located one I like yet. It's sort of one of those dawdling things. But in my lease, it says if this is not actually viable legal purpose, my lease can end. So I'm not stuck. If the town says no more Airbnb, I'm not stuck trying to sublet out and break even. But yeah, I mean, that's a great play.
I'm not, well, I shouldn't say this. I am actively looking, but I haven't done one yet. And it's interesting because to me, it should be a win-win. If you trust the person that is being the person who's going to have the Airbnb, and then they're getting more than what they're expecting, I'm thinking that it should be a win-win. But of course, you still have the old mentality of I don't want any type of disturbances. I don't want to have to deal with the headache of maintenance issues or damage and so on and so forth. But I mean, Steve, let me tell you a short story here. There was a realtor who I was speaking with. I forget which state he was in, but his strategy was I'm going to Airbnb out the listings that I have that are high days on market where the sellers do not want to come down in price. So it'll be effectively a win-win for all of us. So I'll manage the Airbnb. I'll get some type of fee from that.
Split or whatever, yeah.
Right, and then the seller is able to have this as a cash flowing asset as opposed to just sitting vacant.
Yep.
And
That's a great
in
point.
many cases, it's being maintained fairly well. So it's a win-win, and if they want to keep it on market like that for however long, they can do that.
Well, yeah, and also you can throw technology at it. That you can have smoke detectors that actually detect cigarette and pot. You
Oh
can have
wow.
noise detectors that notify you if noise levels go above X. I have those in some of my student rentals. And the same kind of mentality goes on the short term, on the medium term, the nursing and whatever. And the same play of, not just the arbitrage rental side, but also the tired whatever. I'm actually trying to talk, the seller kind of runs hot and cold, to a guy who has a 20 unit old dead roadside motel.
Hmm.
And I'm looking at it as a self storage and a medium term, transitional housing play as well. But same kind of thing where I'm coming to him saying, "Oh, it's not seller finance. I'm buying you, but I am paying you off over time because da, da, da." So finding those creative sellers is always great. The problem right now is because we're coming off a seller, at least up here, we're coming off a seller's market for the last 4 years. The sellers still believe it's a seller's market. It hasn't quite sunk
Yeah.
into them that the game is changing and days on market are going up and whatever. So we're getting, but the landlords, and his idea. I love his idea. I've got high days on market listings, and I'm running Airbnb. So if I get a sale, I can clear it way before that happens. If I'm running Airbnb for a week, and sale's not going to happen in a week, so that's a great play. And like self storage, mobile home parks, RV parks, as long as you don't own too many of the actual physical units. If your mobile
Hmm.
home park is 80% park owned, well, effectively you're running an apartment building because you're responsible
Right.
for maintenance. But in all those things, you're basically renting dirt. In self storage, I'm swearing, okay, climate control to a small extent, but I'm swearing to keep you dry. I'm giving you a steel box and saying, I know the roof works. Good luck with everything else. And those kinds of rentals are great. They're expensive.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
To get into because there's such a high profit margin, or because there's such a low cost and so fairly easy that the real estate investment trusts and so forth are after you. But the two that I'm in the process of, well, hopefully we're breaking ground next month on, the REITs are one of my escape routes. I'm saying, okay, I'm going to have $3 million into this thing, and I know U-Haul, assuming everything doesn't change, U-Haul will pay me $9 million in 5 years. So, I'm fine. I can either
Exit
keep it and
strategy,
live
yeah.
off it forever, or I can exit big. So, that's it.
When I'm talking to guests about the different strategies about for folks who are considering getting into the real estate space, of course people are going to look at wholesaling, they're going to look at fixing and flipping, they might look at even just looking at a rental or buying a property off the MLS to use as a long-term rental. But some strategies that are particularly intriguing to me, just selfishly, are the midterm or corporate housing space, and then also storage and RV parks. Because with midterm, and I select these things specifically because midterm, if your tenant is having issues, or if the individual who's staying there is having issues, the business that they're employed by is also going to be taking note of this, especially if your contract is with them.
Right.
So if it's a hospital, business, right, whatever the case may be, and they lose their job, well, now they're going to have to get someone else to fill it anyhow. So that seems to me like less of a headache. Also,
Well,
when it comes, go ahead.
no, yeah. I was going to say, you're absolutely right. Like, if you have that, midterm is great because if you have that corporate backup, and even if you don't, you never expected them to be there for a year.
Yeah.
So if they promise 6 months and they leave in 3, well, okay, it's a little different, but not huge.
Yeah, versus staying there for a year, they break their lease and so on and so forth.
Yeah.
So, with the storage and with the RV parks, to your point, Steve, if you're owning the dirt, what is your overhead? Well, your overhead is your initial investment. It's not like there's tons of maintenance. With the storage facility, I'm a little less well versed in that. I could see that being a larger acquisition fee. I could see there being some maintenance involved with that. You have to interface with the different, owners of the storage units. But in general, it's not like these people are living there. So in most cases, I can't imagine you're having to deal with issues of the scale of an eviction. Of course, people might not pay; they might leave their stuff in there, and so on and so forth. But it's not as big of a headache.
Well, exactly. I mean, and because you have in storage, you have no care, custody, of control of the unit. Meaning you don't have access to their box. So if they come to you and say, my such and so was stolen, you say, well, that's too bad. Who'd you give your key to? Because we don't have your key. So it's not our problem. And what I love to say, I mean, it has a lower cost load, but it also has a lower stress, meaning it's, if you say residential rental is 50% load. This is more like 40 or 30% load, because if you have a furnace, it's only keeping it above freezing and below boiling. But also, you never have the 2 a.m., oh my God, the furnace went out, my kids are dying. You're not there on Christmas Eve. Whereas, if your storage unit, your furnace goes out, okay, you may have a problem if you promise a certain temperature, whatever, but no one's dying there. If they're living there, they're in violation. So it's definitely a different model. RV parks, yeah, you got to keep your underground stuff right, and you got to keep your, whatever. Same thing with mobile home parks or whatever, but it's definitely a little bit of a different game, because the toilet's not yours, the furnace is not yours, the whatever else is not yours. So if their furnace dies on them on Christmas Eve, that's their problem.
That's their problem. I'm almost at a point, Steve, where I think if people are looking at wholesale, fix and flip, Airbnb, these strategies, and sure, it costs more to do some of these other strategies, but they could partner with other people. To me, as someone on the outside looking in, I'm looking at, even though it may be a little bit of a higher barrier to entry, the effort, the output of focus and time and energy is honestly similar. From hearing people talk about this, it's a lot of effort to go from one industry where you're not in real estate at all to getting an Airbnb, it being successful. It could get shut down. You got to have good reviews, so on and so forth. You got to furnish it. It's honestly, in my perspective, a similar level of effort to partner with someone and look at an RV park deal.
Well, and really, and having the right partners going in and having very careful partnership agreements. I can go on for hours of all the pitfalls in partnership agreements. Partnerships can be like arsenic sometimes. Pick the arsenic and just move on. But you definitely, I mean, and everything is going to suck. Like people say, oh, wholesaling is easy. It can be easy. Or on one that I'm going to make my partner and I are going to split like $9,000 off of. The seller is not being a jerk, but they're just kind of clueless, and they're kind of fighting every single thing we ask them to do.
Right.
Her husband no longer has his green card, and he refuses to get it, and therefore, well, why can't you buy my house anyway? Because he can't sign. And so you spend as many hours or as much stress on anything, so you got to kind of pick it. To me, wholesaling, I don't love fix and flips. I'll do some ground up builds, but I don't love fix and flips, because fix and flips and wholesaling are potato chips to me. I get a chunk of change, and then, okay, that was fun. Now what's coming next month? Yeah. Whereas rentals of any kind, self-storage or whatever, that's a diesel engine. It's always throwing off a couple bucks. It might only throw off after you pay everything and you do all your numbers, $200 a month. But okay, that's $200 every single month.
Yeah, I had a guest tell me the best fast money is slow money. The best fast money is slow money. And so, to your point, I had a guest. This is kind of a unique situation. He was a fix and flipper for something like 12 or 13 years, still had his corporate job, and realized that he wasn't any closer to replacing his income to allow him to really escape the W-2 job. Right. And so he's like, well, what am I doing wrong? And he realized that his core competency was in fixing and flipping, but that he hadn't really done much by the way of wealth building that's of a more permanent variety. And so you could just be on this hamster wheel, which is really not building traditional real estate wealth.
And that is really one of the biggest things I tell everybody is, it is exactly that. You need to find a way to build the engine. Like even on the brokerage firm, okay, great, we cash a couple $1 million in commissions. Okay, fine. Now what? So like I'm getting out, I'm building I run the wholesalebroker.com, and I also run my actual Pennsylvania licensed brokerage firm. The whole goal is I don't want to write transactions anymore. I want to get people on board, Pennsylvania and nationwide, that want me to guide them through, want me to be their legally or not broker. And so I'm getting 5 or 10% from each deal, but I got 25, 15, 25, 30, 35 people out there bringing me deals. So that engine continues to run, and I don't have to be there for it. My private lending, same thing. I'm not the guy flipping that house, but I'm giving the money to that guy. And, I'm sitting here guiding them, consulting them, JV, partnerships. I do a lot of experience in credit partnerships where a newbie comes to me, yada, yada, yada. And I'm getting a piece for helping steer the boat, I guess, for lack of a better term.
So with private money lending, I've seen this as a trend probably recently. I'm in Dallas Fort Worth Metroplex, so Dallas area in Texas. I've seen people go from fix and flipping to lending money, hard money lending, note buying, so on and so forth. And so I'm imagining that they're doing this as a way to not be as hands-on in the business, and it's almost like the next level that I'm seeing, and it's a natural progression. But I'm also looking at it from the perspective of these were people, predominantly a lot of them, who were in the fix and flip space. So if the people that they're lending to default for whatever reason, it's not like they do not have the ability to go and take it over themselves. Right. They can do it. Versus a bank, it's not the same thing. The bank does not want to have real estate assets under management, typically. They want to get rid of them, right? So if someone's not paying, that's not their wheelhouse.
And exactly. And for me, like I've got, like my retirement fund is pretty much all lent out. Probably 80% of it's lent out. I don't really have any stocks in that area. And I've got a line of credit based on that as well that I loan out. So I loan out money I'm probably not buying with, or right now I'm loaning out money that I want to buy with, but until I find a deal, I'm talking to a guy later. I'm going to get 20% loaning him money for 6 months, flat 20. So, so probably in the next 6 months, I won't need that money. He doesn't want a large portion. So basically to me, it's a matter of cash flow without a lot of risk, because if I've underwritten it right, the worst thing that happens is I end up owning an asset that's worth more than I put out. And from his side, he doesn't have to go to a bank and get a blood test and, all that.
Yeah, literally.
And also, when you get going with a private lender, like I've got one or two guys, they call me up, they send me the numbers, I like the deal, I wire them the money. I wire the title company the money. I don't need to, there's no process. I see that the deal works, I've dealt with them before, boom. And I use that in a mixture with, I do debt service coverage ratio lending through Lendmark Capital and some other ones. So, it's always a mixture of what works in that scenario.
At what point in time did you realize I'm going to shift to hard money lending? Was it a time where you just reached a monetary amount, or was it a time where you wanted to get out of the fix and flipping space, or not so much fix and flipping, but just doing new builds?
Well, for me, it's not getting out of. For me, it's generating cash flow while looking for the next deal.
Yeah.
I mean, my 2 year with this new line of credit money, my goal was to go out there and say, okay, that line of credit will leverage to another $2 million in ownership, yada yada. But now the problem is finding that ownership that meets my numbers goals. Until then, I can either let this money sit, or I can, do something else with it.
Interesting. Okay.
Also, it's also a commodity purchase. It's going to take me, 3 months to find a property, get it up running, da 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 da. Or someone calls me and says, I want to borrow money tomorrow, and within a week or so, I could be, have that money deployed and doing something with it.
Yeah, it's a totally new way of looking at it. I'm still, as you can tell, I'm still understanding kind of the arc of a real estate investor's career. So many different ways to go into it. And when I hear about, private money lending, and so on and so forth, I think about this idea of getting out of the day-to-day operations. But hearing you talk about it, it's like, well, no, let me have my money work for me while it's sitting here anyhow, and then I can continue to go look for these deals.
Well, I mean, the biggest mistake that we made early on is, and I know we're kind of running out of time, but the biggest mistake we made early on is doing everything myself. I mean, I remember one day when I was still doing a lot of technology stuff, I'm literally painting the floor at one of my houses. At the time, painted floors were still an acceptable option in some of the affordable houses. And on the other hand, literally, I had my cell phone on my other hand talking to Samsung International about some satellite, some levitation of laptops or something. So like literally, I've got
Everything.
and two different worlds. And at the time, I was the maintenance person, I was the buyer, I was the seller, I was the manager, and we've kind of gotten to the point where we also run a management company now. My wife handles that, but we have a maintenance call service. Tenants call in, this call service books a contractor, they take care of it. We don't go out anymore. So it's very important. And early on, your suck zone as a rental owner is up to about 25 units before you're making enough to make it worth doing. I've strongly advised people don't try to self-manage, at least not after like 1 or 2 units, if you still have a real job. Like I was against it, but I now use a transaction coordinator for every single transaction. From the moment I sign with a client to the end of the deal, my TC handles most of the whiny back and forth paperwork stuff. My rule of thumb is if the job is not worth $300 an hour, which is not what I make usually. I don't make $300 an hour, but if the job's not worth $300 an hour, I'm paying somebody for it
To do it.
because I can do better if I have 5 people out there doing it for me. So that's
Great
kind of
mentality to have. That approach. I'm probably going to think about that some more, just because there's so many different perspectives that you get hosting a show like this, and to hear yours really, once again, talks to the point of a real estate entrepreneur, high-level real estate operator has got to have this kind of entrepreneurial neuroplasticity where you're able to go and adapt your strategy based on the opportunities that are in front of you. And even hearing you talk about, not being so quote unquote set in your ways that you're like, I have to do everything myself, and instead finding ways to delegate that while still not losing oversight of the business. It's really interesting conversation here. We are coming up on time here though, Steve. Where can folks go to get a hold of you?
Yeah, so you can always text me or call me. Texting very often works better. 570-798-7051. It's my direct number. You can go to reihomepage.com, which is sort of my little flower that has all my different companies on it. The wholesale broker, and with Pennsylvania just having changed the law on wholesaling, and with some other states in the process of changing their law, wholesale broker is not a brokerage firm. I own a PA brokerage, actually 2 of them, PA brokerage firm, but that's sort of my back office for wholesalers nationwide. And it's also one of my education sites. REI Answer Man is the other one, but REI homepage has everything. And, if you want a credit partner on a deal, you want a consultant, you want a private lender, you want to take some of my courses, you want to join if you're a salesperson, we're always looking for qualified people to do what I call my free JV program, which is you bring in a wholesale seller and we'll split the profits on cutting it up for the rest of the way. We will work with you a number of different ways. We'll work with you any other way. So 570-798-7051 or reihomepage.com or thewholesalebroker.com. You can also find me on Facebook and whatever else, but those are the 3 most popular.
Steve, thank you so much for coming on the show today, for giving our listeners some value. Thanks for your time, man. Thanks for coming on.
Thank you. I appreciate it, man. Thank you. Bye-bye.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.